Hello everyone, welcome to another episode of Ask NDB Wealth mid-month market update for the month of June 2023. I am Harini Vijayaratnam and with me I have my colleague Chamalka Karunaratne who will be presenting the interest rate performance.
Hi. So the month of June started with a monetary policy review where CBSL decided to cut interest rates. So the standard deposit facility rate came down to 13% and the standard lending facility rate came down to 14%. Following the announcement, the secondary market saw a reduction in 250 bips for the 1-year T-bill, which was trading at 18%, and the T-bond, the 927 and the 527 T-bonds, which were trading at around 23.5%, a drop compared to 26% from before the announcement. The weighted average yields in the T-bill auctions also came down. So the 1-year T-bill auction rate came to 18.08% at this week's auction, and this is a 480 bips drop compared to the auction held on the last week of May. So demands in the auction has been very high, with the bids being around 379 billion. So the central bank's decision to reduce interest rates came after the inflation numbers had dropping, and the inflation numbers were actually en route to hit a single digits by the end of this year, which would be the IMF target for next year. So that was mainly the reason for the central bank's decision to reduce interest rates. So bank FD rates also came down, with the FD rates being at 10% for the 3 state-owned banks, and also commercial banks also reduced the deposit rates. On the global front, we saw that the US Federal Reserve made a decision to keep interest rates at the same level, with as the CPI numbers came down to 4% from a high of 6.5%. In contrast, in Australia, Canada and Eurozone, we saw that the monetary boards of those countries increased interest rates, and this is mainly because of a high inflation in those countries. So now I will pass it on to Harini to speak about the economy and the equity markets.
Thank you, Chamalka. On 15 June 2023, Department of Census and Statistics released the GDP results for the first quarter of 2023, and GDP declined by 11.5% on year-on-year basis, with significant contraction was witnessed in the industry sector by 23.4% and service sector contracted by 5%. However, agriculture sector saw a slight expansion of 0.8%. During the first half of June, LKR appreciated and rupee was around 290 levels, which was aggravated with the panic conversion by exporters. This was also supported by the increase in official foreign reserves to US $3.5 billion reported in May. However, for the week starting 12 June 2023, the rupee devalued to 320 rupees levels, with importers gradually demanding for more dollars with the gradual ease in the import restrictions. But with CBSL intervention, the rupee appreciated again. On equity market front, equity market remained dull at the beginning of the month, however started to gain some traction starting from the week 12 June 2023. This may have been due to bondholders realizing their gains after interest rate drop and moving into equity market, and also investors speculate that DDR will be less severe than what they expected. Buying interest was severely seen in the banking sector, and this improved the average daily turnover for the first half of June to 1.4 billion rupees. ASPI closed to 2 months high and was up by 8.5% compared to May end. Foreign investors remained as net sellers during the first half of June 2023, and the foreign outflow was recorded at 1.2 billion rupees. Thank you.
Thanks, Harini. Thank you for tuning in to another episode of Ask NDB.